Ladies and gentlemen, this is a sponsored advertisement from one of my subscribers. Veta Card, Old West educational playing cards, collectible. Have fun learning history. Completely new and original designs created by Veta Card. Old West series contains 4 suits: Amerindians, lawmen, pioneers, and outlaws. Fun for kids of all ages. Never be bored waiting for your turn while playing cards. Learn history while having fun. Great series to collect. Bring something new to game night. Join our satisfied customers. Build your collection of educational and fun cards. And he said also, J Snip, for your people, your subscribers, I'm going to give them 15% off if they use claim code JSNIPFAN, all one word, capital letters. There's no JSNIP4, just JSNIPFAN. So if you want to have an educational card set, you can get the card set from Veta Card right there on Amazon, and I will provide the link in the description box below should you want to buy some pretty cool playing cards. I had a couple people send me an interesting article from bullionstar.com. Death spiral for the LBMA gold and silver auctions? Thought this was a pretty interesting article, if I don't mind saying so myself. Recently, and I mentioned this just the other day, there was an issue with the gold fix at the LBMA, and there was also one prior to that for the silver fix that caused what they call a circuit breaker to trigger. And I guess when the price, the LBMA fix is showing versus spot price, when it's too far off, I guess. I'm not really 100% sure how this particular circuit breaker works, but from what I've gathered, it's something like this. The circuit breaker triggers, it's like too out of whack. Like, wait, we can't allow trading right now, or we can't allow the fix to, because the LBMA is supposedly the physical market, and they fix or get the price that everyone agrees upon, which everyone, meaning the bullion banks, agrees upon, and then they can, move the gold around from the LBMA. However, these are also the same banks that have a vested interest because of some short positions they may have on gold, for example, to where they cannot allow gold to be above such and such price. And spot price is too high. It's going to kill our position. It's going to financially hurt us badly, our derivative position. So we got to fix the price lower. So that happened recently. There was another one again with silver right before that. This is not supposed to happen. Whatever the spot price of CME says it is, which is the COMEX, that's what it really, in all honesty, is what it should be. And we've never seen divergences like this before, where they're happening like it's common or something now. So is it interesting, or maybe I should say, isn't it interesting, that the CME group came out fairly recently before this, just slightly before these events, and said, we're no longer going to provide the utility fix mechanism along with Thomson Reuters like we agreed to a couple years back. We said we do that till 2019. That was the agreement. Yeah, we're going to go ahead and back out now, 2017. Halfway through what we agreed upon. So they're backing out, and we also see right now maybe why they're backing out. There's too much of a discrepancy, and they realize we can't possibly send you the spot price every day for you guys to fix the metals prices lower, epically lower. We can't be a part of that because it's going to show that we're in collusion with you guys and allowing this. No one's doing anything, so we'd like to back out. I'm just giving you a possible opinion here. But so there's something happening, and Ron Manley, kind of a manly name, isn't it? Ronan Manley. Death spiral, and again, this is from Bullion Star. Death spiral for the LBMA gold and silver auctions? This is interesting. Never heard of such a thing before. Never even heard anyone suggest such a thing. Let's see what he has to say. In a bizarre series of events that have had limited coverage, but which are sure to have far-reaching consequences for benchmark pricing in the precious metals markets, the LBMA gold price and LBMA silver price auctions both experienced embarrassing trading glitches over consecutive trading days on Monday, April 10th and 11th. At this outset, it is worth remembering that both of these London-based benchmarks are regulated benchmarks regulated by the UK's Financial Conduct Authority, or the FCA. How much do you want to bet? Just going to throw a wild, crazy conspiracy opinion out there. How much do you want to bet the FCA is the equivalent to the CFTC? Here's the new boss, same as the old boss. Now, you may have heard the CFTC, Trump has to pick two people to appoint to key positions at the CFTC, like top dogs. Keeping in mind, Gary Gensler, as I used to call him, Gary the Turd Burglar Gensler, went to move on to run Clinton's financial side of things for her campaign. You know he's a member of the club. And you know that's why they've never found anybody guilty in the metals market manipulation, because the club members, the fox is watching the henhouse. So he left to go work with Clinton, yada, yada, yada. There's 2 positions available. And Bix Weir did a video the other day saying, hey, silver people, let's send an email from Ted Butler's. It's actually his document, his PDF. Let's flood the freaking 2 new CFTC guys with this letter. We've had enough of the manipulation, which by the way, I agree, even though I don't think they're going to do any damn thing about it, because I quickly found out who that guy is and who the second guy is. Oh, he's tied to this one. He's tied to that group. Yep. Oh, part of the club. Never mind. Within 2 minutes of me reading who they were in the letter, because it mentions who they are, so I went and saw who's the 2 new guys. Wikipedia, this one, he's got his own website. He did this, he did that. Oh, he's part of the club. Let me check the other guy. Boop, 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 boop. Yep, he's part of the club too. Wow. Meet the new bosses, same as the old bosses. So I emailed Bix and said, hey, got some bad news. I also emailed Ted Butler, but, got some bad news. He goes, well, we still got to put it in their face to let them know what we still know. And if we can get a whole bunch of people to do it, we can put them on, on the spotlight on them. I was like, yeah, I agree. So I'm just so sick and tired of seeing the manipulation, and then they pretend like something's going to happen and change. We're putting new people in, and it's the same, meet the new boss. It's the same as the old boss. I'm just so sick of this crap. He's like, yeah, I know, I feel you. So, CFTC, look the other way. There's nothing to see here. The FCA, Financial Conduct Authority, would anybody bet me that they're going to look? They've been looking the other way, and they plan on looking the other way right now? More than likely, right? Unless by chance, for some reason over in London or UK, they're Brexit, we're leaving. UK is now out of that system, so to speak. Maybe they get a clue now. All of a sudden, they're going to do something. I mean, we can all drink or smoke a little hope-ium every now and then, can't we? So anyways, he says, in both cases, the trading glitches had real impact on the benchmark prices being derived in the respective auctions, with the auction prices deviating noticeably from the respective spot prices during the auctions. It's also worth remembering that the LBMA gold price and LBMA silver price reference prices that are discovered, as they call it, each day in the daily auctions are used to value everything from gold-backed and silver-backed exchange-traded funds. It says it's worth noting or remembering that the LBMA gold price and LBMA silver price reference prices that are what they call discovered each day in the daily auctions are used to value everything from gold-backed and silver-backed exchange-traded funds, or ETFs, to precious metals interest rate swaps, and are also widely used as reference prices by thousands of precious metals market participants, such as wholesalers, refineries, and bullion dealers, to value their own bilateral transactions. Although the gold and silver auctions are separately administered, they both suffer from limited direct participation due to the LBMA only authorizing a handful of banks to directly take part. Only 7 banks are allowed to participate directly in the silver auction, while the gold auction is open to currently 14 entities, all of which, of course, are banks. Limited participation can, in theory, cause a lack of trading liquidity. Added to the mix, a central clearing option was introduced to the LBMA gold price auction on one of those days I just spoke of, Monday, April 10th, a day before Tuesday's gold auction screw-up. The introduction of this central clearing process change saw 4 of the direct participants suspended from the auction since they had not made the necessary system changes in time to process central clearing. This in itself could have caused a drop in liquidity within Tuesday's gold auction as it reduced the number of possible participants. Other theories have been put forward to explain the price divergences, such as the banks being unwilling to hedge or arbitrage auction trades due to the advent of more stringent regulatory changes to prevent price manipulation. While this may sound logical in theory, no one, as far as I know, has presented empirical trade evidence to back up this theory. There is also the possibility of deliberate price manipulation of the auction prices by a participant or participants or their clients, a scenario that needs to be addressed, either ruled out or confirmed. ICE Benchmark Administration, the administrator of the LBMA gold price, also introduced a price calculation algorithm into the gold auction in mid-March 2017, a change which should also be considered by those seeking to find a valid explanation for the gold auction price divergence, where the opening price kept falling through multiple auction rounds, while the spot price remained far higher. Could the algorithm have screwed up on April 11th? Whatever the explanations for the price divergences, these incidents again raise the question as to whether these particular precious metals auctions are fit for purpose, and why they are designed and allowed to be designed at the outset to explicitly block direct participation by nearly every precious metals trading entity on the planet, except for a limited number of London-based bullion bank members of the LBMA. So now he says he wants to talk about the LBMA silver price fiasco. First up on Monday, April 10th, buried at the end of a Reuters News precious metals market daily news wrap, was a very brief snippet, and this thing is the one I was telling you about earlier, of news referring to an incident which dogged the LBMA silver price during Monday's daily auction, an auction which starts at midday London time. And it says, according to Reuters, silver prices slipped after the LBMA silver price benchmark auction was paused for 17 minutes after a circuit breaker was triggered when the auction price moved outside of the spot range, the CME said in a statement. What exactly the CME meant is unclear, because whatever statement Reuters was referring to has not been released on the CME Group website or elsewhere, and Reuters did not write a separate news article about the incident. You got that right. They're only going to give you a little teeny tiny blurb. To recap, the LBMA silver price is administered by Thomson Reuters. Again, this is what I was telling you about. Them, along with the CME, we're going to back out now, even though we have an agreement to 2019 or 2020, whatever the year was. So anyways, it's administered by Thomson Reuters on a calculation platform run by the CME Group and operated on a contract basis on behalf of the London Bullion Market Association, LBMA. However, there is nothing anywhere on the CME's LBMA silver price webpage or on the Thomson Reuters LBMA silver price webpage or on the LBMA website in the form of a statement, comment, or otherwise referring to this circuit breaker that persisted for 17 minutes in the LBMA silver price auction, during which time the auction price moved outside of the spot range. On its calculation platform, CME makes use of a pricing algorithm to automatically calculate a price for each round of the LBMA silver price auction, excluding the first auction round. And from page 8 of its LBMA silver price methodology guide, 3.7, starting price, the initial auction price value is determined by the auction platform operator by comparing multiple market data sources prior to the auction opening to form a consensus price based on the individual sources of market data. The auction platform operators enters the initial auction price before the first round of the auction begins. And then it goes on to talk about the end of the round comparison. If the difference between the total buy and sell quantity is greater than the tolerance value, the auction platform determines that the auction is not balanced, automatically cancels orders entered into the auction round by all participants, calculates a new price, and starts a new round with the new price. There is also a manual price override facility, which can be invoked if needed, which says in exceptional circumstances, CME Benchmark Europe Ltd. can overrule the automated new price of the next auction round in cases where when more significant or finer changes are required. When doing so, the auction platform operator will refer to a composition of live market data sources while the auction is in progress. As to why the auction platform operator did not invoke these manual override powers and seek market data sources during the time in which the silver auction was stuck for 17 minutes is unclear. A 17-minute pause would presumably be, in the CME's words, exceptional circumstances. Unfortunately, neither the CME website, the Thomson Reuters website, or the LBMA website provides intra-round pricing data for the LBMA silver price. So anyone who doesn't have a subscription to the live data of the auction is well and truly left in the dark as to what actually happened on Monday the 10th of April. Unlike the LBMA gold price auction, which at least provides an auction transparency report for each auction, the LBMA silver price auction is sorely lacking in any public transparency whatsoever. Quick look surprised. But what is clear from the Reuters information snippet is that the LBMA silver price auction on Monday the 10th suffered a serious trading glitch that saw the prices that were being formed in the auction deviate from where the silver spot price was trading during that time. This price deviation suggests a lack of trading liquidity in the auction and or an inability of the participants to hedge their trades in other trading venues. As to whether that final LBMA silver price that was derived and published as the daily benchmark price on the 10th was outside the spot range and above or below spot is not mentioned in the Reuters report. I'm sure it was much lower than spot price. Come on. The complete opacity about this incident is concerning, but not really surprising, since nearly everything in the London precious metals market is shrouded in secrecy, and corporate communication in this area is truly abysmal. Recalling that Thomson Reuters and CME announced in early March that they are abruptly pulling out of the contract for administrating and calculating the LBMA silver price, this latest fiasco is unwelcome news for the LBMA, CME, Thomson Reuters triumvirate, and raises further questions for the FCA, their regulator, as to whether the silver auction and benchmark should even be allowed to continue in its present or similar form. The LBMA gold price fiasco. Turning to the London gold auction on the afternoon of the 11th of April, the LBMA gold price auction, which starts at 3 p.m. London time, experienced what can only be described as a shocking and serious trading fiasco, which has real-world consequences for all trading entities that use the LBMA gold price benchmark reference price, and there are many that do so. As a reminder, ICE Benchmark Administration, IBA, administers the daily LBMA gold price auctions on behalf of the LBMA. Again, it was Reuters that broke the gold auction news. In a short article titled "London Gold Benchmark Fixes $12 ounces off spot price," $12 per ounce, off spot price, Reuters said the following: London's gold price benchmark fixed some $12 below the spot price on Tuesday afternoon as the auction appeared to become locked in a downward spiral. From an initial $1,265.75 close to the spot price at the time, the auction price ratcheted steadily lower before fixing at $1,252.90 in the 9th round. From the 5th round to the 8th, the bid and offer volumes remained frozen, unable to match. This came a day after ICE introduced clearing for the LBMA gold price auction. Reuters concludes its article by noting that the ICE clearing was introduced before several participating banks had the necessary systems in place. As a result, China Construction Bank, Société Générale, Standard Chartered, and UBS are yet to confirm a date for their participation in the cleared auction. ICE declined to comment, of course. The LBMA, which owns the intellectual property rights to the auction, was not immediately available to comment either. Quick looked surprised. This forced reduction in the number of participants in the auction seems to be relevant to the issue and therefore requires further scrutiny. ICE Central Clearing, foisted on the LBMA gold price auction? In mid-October 2016, during the LBMA Precious Metals Conference in Singapore, ICE Benchmark Administration announced that it would introduce central clearing into the London gold price by utilizing a series of daily futures contracts, which it planned to launch in February 2017. The introduction of central clearing into the auction was initially planned for March 2017. The LBMA Gold Price Oversight Committee meeting minutes for November 4, 2016 specify the March 2017 launch date and make clear that all banks wanted to move to use the clearing route and that ICE Benchmark Administration wished to keep running a healthy auction, whatever that means. The minutes stated the following. IBA gave a central clearing update to the committee, notifying them that the cleared instrument would be launched in January 2017 and the auction trades could be routed there from March 2017. The committee were informed that IBA had spoken to every bank and every bank wanted to move. Discussions moved to the technical implications for this new model and IBA's primary wish to keep running a healthy auction. Up until at least the end of February, ICE's LBMA gold price page stated the following. From March 2017, subject to regulatory review, centrally cleared settlement will be available for transactions which originate from IBA's gold auction underlying the LBMA gold price. Just scrolling down, I don't want to read every single little piece of this thing. As a reminder, ICE and CME have both recently launched gold futures contracts connected to the London market and the London Metal Exchange. Plans to launch its own suite of London gold futures contracts in early June. How these ICE daily gold futures work in conjunction with the afternoon LBMA gold price auction is unclear, but the futures have daily settlement each day between 3 p.m. and 3:05 p.m. London time. An email to IBA CEO asking for details of how the futures are linked to the auction went unanswered. Both the ICE and CME contracts had a damp squib start, experiencing weeks of zero trading volumes. See Bullion Star's article from February 8th, titled Lukewarm Start for the New London Gold Futures Contracts. So what was this downward spiral that the LBMA gold price auction experienced on the afternoon of Tuesday the 11th, April 11th, when it became, in the words of Reuters, locked in a downward spiral? Let's look at the ICE auction transparency reports for the few days before and during the 11th of April afternoon fiasco. These reports show the number of auction rounds, the number of participants, and the bid and offer volumes for each round, as well as the price at the end of each round. 14 entities are now authorized to be direct participants in the LBMA gold price auction, 13 of which are banks. Quick, really look surprised. The other being new participant International FCN Stone since early April. International FC Stone is a financial services company that has a slant towards commodities. Here are the 13 other banks. Bank of China, Bank of Communications, China Construction Bank, Industrial and Commercial Bank of China. That's 4 that are China. Goldman Sachs, HSBC, JP Morgan Chase, Morgan Stanley, Société Générale, Standard Chartered, the Bank of Nova Scotia, Toronto Dominion Bank, and UBS. So there's quite a bit more to this auction, but there's something going on. I mean, to this article, and I'll finish off with a conclusion. The trading glitch with the LBMA silver price on Monday the 10th seems to have been completely missed by London's financial media, except for the brief reference by Reuters. The fact that there is no information on the CME, Thomson Reuters, and LBMA websites about the issue. Hang on. The fact that there is no information on the CME, Thomson Reuters, and LBMA websites about the issue should raise concern for users of this benchmark and for the UK's regulator, the FCA. In an ideal world, there should be a full outage report published on each of the 3 websites explaining what happened, but this will not happen in the shadowy and secretive London silver market. Perhaps the auction price divergence in the LBMA silver price stems from a lack of liquidity brought on by the limited presence of auction participants, or due to the inability or unwillingness of participants to hedge or arbitrage their auction trades against the London OTC, or which is over-the-counter, spot or other trading venues. The simple thing to do would be for CME, Thomson Reuters, and the LBMA to explain themselves, since this would minimize guesswork and to provide global silver market entities with clarity. Anything short of a full explanation by the parties concerned is irresponsible. For the LBMA gold price auction, ICE Benchmark Administration needs to release a full outage report and explanation on what exactly happened in the afternoon auction on the 11th of April, and explain to the global gold market whether the introduction of central clearing was in any way responsible for the price divergence, and whether there are any conflicts of interest in trying to get banks to use its daily gold futures contracts. While they are at it, ICE should fully explain how the recent introduction of a price algorithm impacts the gold auction, and whether this too had an impact on the price, auction price entering a downward spiral. As the LBMA silver price and LBMA gold price are both regulated benchmarks, the FCA regulator needs to step up to the plate and for once show that it is on the side of the users of these benchmarks and not the powerful London and also Chinese banks. Both of these auctions require full transparency and ease of direct participation by the full spectrum of the world's gold and silver trading entities. Currently, they fall short of these goals. Yeah, they're all run by banks. This should be something where miners, producers, sellers of metals, and buyers have a little meeting and decide what the price is going to be. Not flipping banks, in this case the bullion banks, but it's still ran by the big banks. So I'm seeing things happening that are telling, and what I just gathered, I think, is that since CME is stepping back in the CME group, which runs the futures exchange, which is what we see spot price every day, it's based off of their futures market exchange, the COMEX, and it doesn't match over here in London, LBMA, but they just said they have now started issuing futures contracts over there in London. So if I'm to guess what the future is going to hold, as they said, they're going to step back, CME Group, Thomson Reuters. They were using future contracts over here, futures contracts, to set the price, spot price. And the spot price should have jived somewhat with what was happening in London, but it didn't. But now they have their own futures system, they just said, very, very recently. So if I'm to take a stab at what I see in the future, speaking of futures contracts, I would say they're going to do what COMEX is doing, except instead of relying on COMEX, CME Group, they'll just do it themselves. We have paper contracts we're going to start introducing, and the spot price will be set over here, and we'll go off of that. But it'll be a different spot price, I think. Maybe it'll just be the fixing spot price, because you can't have the CME Group over here setting the world spot price on gold and silver, while simultaneously the LBMA is trying to do the same thing so that they can use that for their fix. Confusing times, my friends. But I'm seeing turmoil, the word turmoil, all over this whole thing with precious metals. And I still firmly believe it is absolutely going to come unglued, and prices will skyrocket because of it. Take care, my friends.